when you purchase a stock, are you really buying a piece of the company? Are you buying the future cash flow stream that will be generated in years to come? And whenever you read a research paper published by some analyst that's telling us that it is a great investment and put on a buy rating on the company, should we be excited to purchase more? Or should we be concerned? And what does that really mean? Why does my bank give me $500 just to open a brokerage account with? And why would someone spend so much time and energy to introduce a coffee brand all the way from the other side of the globe to people like you and me here in the United States? Are they trying to give us an opportunity to invest in this great company so that we can all make money? Or are they trying to help the entrepreneurs in China to raise some much needed capital so that they can realize their dream? What's the motivation behind all of this? And what are we really buying as investors? So hopefully, using my analogy, I will be able to explain by the end of this video what is the essence of investing in a stock. The analogy I want to use is to compare a stock to a book. Now, you can imagine the management team of Luckin Coffee as the author, and Luckin Coffee is the story or the title of the book. The lead investment bank, who is responsible for underwriting this company, acts as the publisher for this book, and they would perform a number of financial valuation models such as comparable financials and discounted cash flows to justify a price. These are no different than some marketing scheme to hype up the book prior to its publishing. Very similar to associating title to a bestseller or some popular title that was already published in the past and very well received by the readers. The IPO is the date the publisher starts selling the book. And based on how successful their marketing campaign was, they'll come up with the IPO price, which is the wholesale price of this book. Then comes the syndicates, which is a number of other investment banks that act as the distributors of this book. And this will provide them with multiple channels to make sure that they can sell a certain number of copies. Next comes the brokers, who are the Barnes & Nobles in this analogy. And the asset management firms act as the corporate buyers who are buying the book in bulk. But at the end of the day, the individual investors, whether if you're buying this stock from a broker or you have your assets being managed by those professionals, we are the end consumer for this product. And when the quarterly earning comes, the original author of this book will come out with some untold subplots of the story to entice additional readers who missed out on the first time to purchase the copies that were unsold and at a higher price. Well, what if I'm not even interested in the subplots, or it's too convoluted for me to understand? Well, don't you worry. Then comes the expert book reviews, where the professional analysts put a buy rating or spend their time explaining what the subplots means. What if the company lost money in a quarter? Well, look at Tesla, look Uber. Those are great companies, disrupted their industries, but they haven't made a single penny in 10 years. If someone tells me the more he eats, the hungrier he gets, I would recommend that person to stop eating. But when it comes to investing, all common sense just fly out of the window. For some reason, these experts can convince us to continue to dump millions of dollars into a company that loses more money as its sales double. They will coin terms like unicorn to convince us this is a miracle investment opportunity that only comes once in our lifetime. And just like the stories that they fabricated, a unicorn only exists in the fantasy world. And their twisted logic is all in this preparation for the sequel. And when the sequel comes out, the whole cycle just repeats. You have the lead investment bank coming back, along with its syndicates, to produce, printing millions of copies of new books and being sold through the broker and the asset management firms, the end consumers. And this cycle will continue to repeat itself for as long as the author is able to continue to produce entertaining content. Once the author is no longer interesting, the investment banks will just move on to another up and rising author, telling a new story that will resonate with a new generation of consumers. So when the next new and exciting IPO comes around, just know that our investment into those new companies is just us consuming the stories. And all the parties that's highlighted in gray sometimes belong to the same conglomerate. Sometimes they're just friends doing a favor for each other because they're all in a very complex and intermingled benefit relationship network. So next time when you hear something that sounds too good to be true, it probably is. Instead of treating it as a once-in-a-lifetime investment opportunity, Just treat it like a fantasy story and don't take them too seriously. Because remember, they are just storytellers. Just in case you wonder who the storytellers are, I'm going to end my video with a list of the biggest ones around us. Companies like Bank of New York, Bank of America, Goldman Sachs, Morgan Stanley, Credit Suisse, JP Morgan, Barclays, and many, many more. Stories will be told and books will be sold for as long as we continue to read.